How you guys doing? Welcome back. Today's lesson 49, revisiting our structure. Now, this is what we've been talking about for literally for me, like a year and a half, making this whole entire course. God, when I said 50 lessons, I was like, that won't take very long. I was wrong. It took a lot of time. So we're going to be revisiting our structure today. The reason is we haven't really discussed the structure in itself since, lesson 35 or whatever. So I just want to rehash it, go back through it and how I think about trading. And then, of course, I want to talk about some things that a system has that will change. It kind of piggybacks off lesson 48. After this, my final words of thank you, it's going to be like 2 minutes to say, hey, thanks. And then we're going to go on to a new course I'm going to make soon. I don't know what's going to be, but I'll think of something. With that being said, lesson 49, revisiting our structure. Let's get into it. So the first thing about our structure you'll remember is our foundation, which is the ground here. Obviously, it's the same color because Legos aren't expensive at all. JK, they are. It's all about risk versus reward. So the first thing that our whole entire structure is based off of, all your decisions are based off of, all decisions that a good trader's decision is based off of is risk versus reward. If you don't make dollars, it don't make sense, baby. No, if it's actually a high risk, low reward trade, why would you take it? If it's a medium risk trade and medium reward trade, why would you take it? You want to buy low, sell high. That starts with low risk entries and high reward exits. So if all your decisions, everything else besides this is fine, I still wouldn't take it, right? If it's a high risk, high reward play, sure. But again, all your decisions you're making for your stock picking, your investments, long-term, short-term, whatever it is, 9 out of 10 times it starts with risk versus reward, low risk, high reward. Again, it could be determined from fundamental analysis or mental analysis. I personally use technical analysis for that, and that's always going to be my foundation. So our foundation, again, is risk versus reward, always low risk, high reward setups. If I can find that, I'm happy. It was our second wall here, doesn't really matter. Our wall right here is going to be technical analysis, fundamental analysis, and mental analysis. So what is technical analysis again? For me, it's just the charting, the graphing, all the great things with indicators of how you can enter and exit a stock and find risk versus reward. For me, it's always supports, then resistances, trend lines are third, patterns are fourth, EMA lines and volume profile, RSI, stochastic, and the vortex indicator. I'm sure in 2 years, if you watch my channel again, this may have changed. But for now, it's those 9 things that I enjoy that helps me find clarity in a stock for risk versus reward. The second thing was fundamental analysis. Again, that is the quantitative and qualitative things that makes a company tick, go, run, be successful. Now for me, I'm not as concerned with earnings reports, income statements. It's a lot of like, oh, if I was buying and hold for 10 years, sure, but I'm not. I'm trading for like 4 or 5 days. I don't care what the CEO says. It doesn't really matter to me. What matters to me is PE ratio, forward PE ratio, EPS, ROI, AE, talking about debt to income ratio, margins. These things matter to me because I can understand this company makes money, this company loses money, all these types of things. Now, again, as I mentioned before, trading is 80% technicals, investing is 80% fundamental. So they are different mindsets. But again, our second part of our wall, we have technical analysis here, and then fundamental analysis, third being mental analysis. When it comes to mental analysis, it's what makes you tick and compared to the company, and it's what you consider risk, reward, fear, accountability, responsibility, clarity, all those kinds of things that makes you tick. What's more important than just knowing what is good about you as a trader is what's bad about you as a trader. If you are the most fearful, can never enter kind of person, you're going to have an issue. And as we discussed in the course, to me, fear is almost like walking across a canyon with no handrails and there's alligators all around you, right? Would you walk down a 1 foot wide pole with a bunch of gators around you? Probably not. Some of y'all would, but probably not a lot of you. But maybe you're like, hey, okay, if that's the case, good technical analysis. Add 2 feet to that. All right, 3 feet's not bad. I'm not going to cross that, but I feel a bit better. All right, fundamental analysis. This company makes more money than they lose. Okay, we'll add 2 more feet. Okay, 5 feet. That's not bad to walk across. That's fine. It's like an ATV. That's cool. All right, now we have a trading plan. Now it's 7 feet wide. Okay, the macro markets, I know what they're doing. 10 feet wide. And as you can see, as you add more stuff to your arsenal, not different, you just get more refined with what you're good at. You add that, you get more refined with it, fear goes away, and in comes accountability and responsibility. You can blame hedge funds, you can blame the macro markets, you can blame Russia, China, Biden, Trump, doesn't matter. If you blame someone or give someone credit for a trade that you made, wrong. Only you made that trade. only you exit that trade, it's 100% on you. Once you figure that out by mental analysis, you have a much better time trading than you did before. The second whole wall besides our first one is going to be writing an actual trading plan. This is critical because our friends at the chat say you plan a trade and then you trade that plan. There's been a bunch of times I've exited stocks early, exited them late, not following my plan, but as of recently when I've gotten better with my public portfolio, I've been sticking to my plan entirely and having a much better time. Having a good plan written down, whether it's based off technical or fundamental analysis or whatever it may be, having a plan written out is critical to success and helps you reflect as well. So having a good plan, whatever it is, written down, if it's going to be on paper, computer, on the chart itself, you have to have a plan. And of course, as always, as I just said, I'm saying it again, plan a trade and trade that plan. The third wall, besides our technical analysis, fundamental, mental, and then of course our trading plan, is going to be macro markets. Da-da-da. The macro markets are critical. Again, they weren't the highlight of this course. It wasn't never supposed to be. It's just important to note for me, macro markets are going to be our overarching gravitational forces. It is important to know what these gravitational forces, they're not the end all be all, and a lot of times you can actually use these kind of as benchmarks for your own success. With the markets this year being down so far, this is again in 2022, idiot. In 2022, they're down about 8%. I'm about 4%. Now, would I go home and be super impressed with a 4% gain any other time? No, but if I were to say, well, the markets are down 8 and I'm up about 4, that's really not that bad at all. So I think it's important to note that macro markets are very important. They're a great sign of trend and direction, but they're not the end all be all. Don't be over here spending 4 or 5 hours a day watching them. 30 minutes in the morning is all you really need. And the last wall is goal settings. We have all three: analysis, trading plan, macro markets, and then of course goal setting. We discussed this at length, nothing too crazy, but of course just know what your long-term goals are and your short-term goals are. If you don't have that even figured out, if you're gonna not have any kind of goal setting at all, well then the other three walls are meaningless if there's just a gigantic hole in the wall, right? If you have this broken open and you don't have any consistency on top and then that's it, well, there goes your trading system, right? So you have no goal setting and you're never gonna have any kind of consistency or success. So make sure, as simple as it is, you just identify what kind of trader you want to be, what kind of portfolio you want to have, what kind of timestamps you want to have. That's critical to success. Think about that, grow on your goal setting, and of course, identify smart goals, long-term and short-term goals, and it'll be much more successful. And lastly is consistency. Nothing really to talk about with that. It's just the last few lessons that we talked about, whether it be refining our rules, finding some new ideas to talk about. I just put that on top there. As you go through your trading journey, things will change, times will change, markets will change, what's hot will change, right? I'll never change as being hot, I'm adorable. But there will be different things that kind of come and go. You have to be consistent with them. I want to point out some things that do not have to be consistent. That's part of your trading system compared to your trading structure. The first being time frame. I myself trade almost exclusively off the 360-day 4-hour chart. Previously, the 180-day, but as times have gone on, I kind of expanded my vision, and TOS made it a little bit easier to use that, and so I've kind of expanded it and include more data myself. The 360-day is all I use. Now, some folks may not find that shocking. I literally don't zoom in, ever. I don't really care. It's never bothered me at all. I can just check the charts once, twice a day, and I'm happy. So that can change if I do want to day trade, which I do occasionally. And it does change occasionally. The 2-day or the 1-day 2 minutes fine, 5-day 5 minute, you can zoom in. But again, those things, time frame analysis and different times, can change as time goes on. The second thing that's huge that can change is holding time. Of course, again, I use price targets as a price. Time means nothing to me. If I enter a stock that goes sideways for 2 weeks and it never leaves my yellow block, I don't exit or enter. I just stay and wait, right? And as soon as it hits my green box, it could be a day, 3, 5 days, I then exit. I don't think time frame and holding is even relevant. It just comes out of hitting time. It just comes down to hitting my price targets, not my time frame I want to hold. It doesn't matter to me. That will always change. Thirdly is position size. As my account gets bigger, as yours gets bigger, I personally have to cast a wide net, not a deep net. What do I mean? If I have $10,000, I'd much rather have 10 $1,000 investments or trades compared to one $10,000 one. If you buy a stock, you're like, oh, I love this stock, 10,000 bucks into it, earnings drops 40%, you lose $4,000, not going to be a good time, right? But if you have $10,000 ones and one does that, 400 bucks, you're like, that sucks. But at least you then have at least, again, 96% of your portfolio is safe It only lost 4%. That's much better. So again, position sizing does matter. We'll talk about that later in different classes, but for now,